Hi friends, today we are going to discuss about the double entry bookkeeping system. Now let's begin with double entry system has been derived from Luca Piccioli's book, that is De Corporis et Scriptis, that was based on the double entry accounting in the year 1494. Okay, he was an Italian merchant, so he told that every transaction has two accounts. Okay, among these two accounts, one is debit and another one is credit, and both of these debit account and credit accounts are always equal. Hence we can say that on any date the total of all the debits must be equal to total of all the credits. Okay, for understanding this in detail, what is debit and what is credit, we should study about the classification of the accounts first. Now if we talk about the classification of the accounts, these can be broadly classified into personal account and the impersonal account. See, personal account, as the name suggests, it can be a natural person or the artificial person or representative person's account. Whereas impersonal accounts are real accounts and the nominal accounts. And for the real accounts, it can further be classified into tangible real assets and the intangible real assets. We have already studied in the previous lectures like what is tangible assets and intangible assets. You can go through the previous videos. I'll provide the link in the description below. Okay, still, if you want to understand what are tangible assets are those assets which can be seen or touched. Okay, so assets that can be seen and touched are known as your tangible assets. For example, machinery, furniture, etc. Whereas your intangible assets are those assets that cannot be seen or touched. For example, copyright, trademarks, etc. Okay, so we'll study the types of accounts, the classification of the accounts in depth. I told you about the first is your personal account. Personal account has three categories: natural person's account, artificial person's account, and the representative personal account. Now what is natural person's account? As the name suggests, it has to be some individual or number of individual. That means they are the real human beings. Okay, so an account recording transaction with an individual or number of individuals are called natural personal account. Example can be debtors, creditors, capital account, or drawings. Now these kind of accounts are of particular person or a number of persons, hence these are known as the personal account. If you want to understand the definition about debtors, creditors, capital, or the drawings, please go back to my previous videos and the description is provided. Okay, so let's go for the next category, that is your artificial person account. Artificial personal account is a person that is not actually a human being, but it has a separate entity in the eyes of law. What does this mean? Separate entity in the eyes of law, that means it can be sued or it can sue others. Hence, for example, these are partnership firms, insurance companies, cooperatives, companies, municipal corporation, hospitals, banks, government bodies, etc. These are the artificial person. Okay, so these can enter into the agreement on their own. That is why these are the artificial persons. Last category over here is your representative personal account. See, an account indirectly representing a person or number of persons when the accounts are similar in nature and their number is large. So hence we group them into one category, that is representative personal account. For example, outstanding salary. Now what does outstanding salary mean? Supposedly I was liable to pay the salary for this month. I am liable to pay a salary in this month, but I have not yet paid. Hence it becomes my liability to pay it. So there may be number of people for whom I have not paid the salary. I will make one account, that is outstanding salaries account. Similarly, prepaid rent. I have already paid the rent of the next month. Of the upcoming month, I have already paid the rent. That means it is rent has been paid in advance. So I will make one account, that is prepaid rent account, and it will be a representative personal account. Similarly, accrued interest. My interest is due, but I have not yet received it. So it will also be your representative personal account. I hope you've understood. Any doubts you have, you can comment in the comment section and I will surely reply to it. Let's move to another category. This is the impersonal account. One was real account, another one was the nominal account. What are real accounts? These accounts hold all the category of my assets and the liabilities. You have to remember this. All the assets and my liabilities are my real accounts. Also, we do not close these accounts at the end of one accounting period. Okay, and hence they appear in the balance sheet. The reason being, if I purchase an asset, it will give me benefits over a future of time. Okay, in the number of years, not only for 1 year, but in the number of years. If I'm going to buy a machinery, say, it will give me benefits for say 2 years, 3 years, 5 years. It's more than one accounting period. Hence, we always record it in the balance sheet. And these accounts are not closed at the end of the accounting year. And what are the nominal accounts? All the accounts pertaining to expenses, losses, incomes or the gains are our nominal account. These are temporary and pertain to only one accounting year, and therefore we can enter these accounts into trading account and the P&L account. Therefore, these accounts have no balances to be carried forward for the next year. See, if I incur some loss or if I have some income, okay, say for this year, that income is only for one particular year. Anything that is only for one accounting period is transferred to the trading and P&L account only. Remember this. Once again, I'm repeating, any expense or income pertaining to one accounting period will come in trading and the P&L account, either of them, right? And it will not be carried forward in the next year. Whereas any income or expense incurred on any asset or liability pertaining to more than one accounting year will come under what? My balance sheet, right? Let's move further. I've taken an example over here. Okay, so in this example you have to tell me about the accounts involved and you have to also classify them. We will study one by one. First, it says Mr. John bought the capital to start the business with the cash. Okay, so what are the two accounts involved over here is my capital account and cash, right? So let's see what are my accounts involved. One is my cash account and one is my capital account. Now, what is any asset? I told you any asset is the kind of real account, and what is capital? It is person, it is pertaining to some person, so it is personal account, right? Next, purchased goods for the cash. Now what are the two accounts involved over here? One is your goods, another one is your cash. See, now what is your goods? When you purchase goods, you write purchases because it is only for your goods that are of the normal course of business, you are producing it. So hence we write it as purchases. Okay, so two accounts are purchases and cash. Purchases are what? When you purchase something, you incur expense. Hence it is a nominal account and your cash is your real account. Why? Because it is an asset. We've already studied in the previous classes that cash is the what? Current asset. Right. Let's move on. Next is your sold goods for cash. So two accounts that are being involved is your sales and cash. Right. Let's see. Your cash and sales. Cash is what? Real account because it's an current asset, and your sales are what? Nominal. Why? Because you are having some income from the sales. That is why it is the nominal account. Next, sold goods to Sam on account of $3,000, right? So what are the two accounts involved? One is your Sam, another one is your sales. Let's see your Sam and the sales. What is Sam? Personal account. He's a natural person. Personal account. And what are the sales? Nominal. Why? Because it is earning something. It's an income. Next, purchased furniture for $1,000, two accounts which are involved is one is furniture, another one is cash, because nothing is given, so hence we assume it is purchased in cash. Let's see, two accounts involved are furniture and cash. What is furniture? It's an asset, real account. What is cash? Current asset, hence it is a real account. Okay, so next, purchase machinery for $5,000. So machinery is what? Machinery is our real asset, real account. Okay, real account, because it's a fixed asset, and cash is again your current account, current asset, and hence it's a real account. Let's move further. Next is your paid wages. Okay, so what are the two accounts involved? Wages and cash, because nothing is given, so we assume it is being paid in cash. So what are our wages? Nominal, because it is an expense. And what is our cash? Real account. Okay, so let's see the last one, that is Mr. John withdrew $100 from business to pay his personal expenses. Okay, so what are the two accounts involved? One is the withdrawals and second one is the cash. Okay, so the entry would be, the accounts involved would be drawings and cash account. What are our drawings? Personal account, because certain person is drawing it. Okay, and cash is our real account. I hope you've understood and you have no doubts. We have already studied the types of accounts. Now, rules for the double entry system. Because you know, the next step we are going to do is the journal entries. For that, you need to understand about how the journal entries are being passed. You've understood the accounts, how these are being involved. Okay, so whether you have to debit the account or you have to credit the account, for that you need to understand the rules of the double entry system. See, in personal account, what do? We debit the receiver and credit the giver. Okay, for personal account, always remember we debit the receiver and credit the giver. Whereas for the real account, debit what comes in and credit what goes out. Okay, I'm repeating, for the real account it is debit what comes in and credit what goes out. And for the nominal account, all expenses and losses are to be debited. All expenses and losses are to be debited, whereas all income and gains are to be credited. You can take a screenshot of this and you have to remember this by heart. Then only you will be able to pass the entries. Now, we'll take the same example, okay, and we'll see whether it is debit or credit. First one was John bought the capital to start the business. Over here, we've seen that two accounts were involved. One was cash, one was capital. Okay. So, what was the rule for the real account? Debit what comes in and credit what goes out. So, we can see what is coming in actually. Cash is coming in. So, we debited it. Okay. We saw capital was what? Capital was personal account. So, personal account was, what was the rule for that? For the personal account, debit the receiver and credit the giver. Over here, John is the giver. He gives the capital. Hence, account is credited. When we write it in accounts, see, we always write cash account debit to capital account. Okay. We never write the credit account. Rather, we only write cash account debit to capital account. Now, let's see the another entry, that was purchase goods for cash. Okay, so over here two accounts were involved. One was purchases and one was cash. But as we've already seen, purchases was nominal account. Nominal, what was the rule for nominal? Debit all losses and expenses. So, over here our purchases are debited and what is going out? Cash is going out, that is why it is credited. See, real account. For the real account, what is there? What goes out? Cash was going out, that is why we have credited it. Let's move further. Third entry is sold goods for cash. Okay, sold goods for cash. What is coming in? Cash is coming in. Cash is coming in. That is why it has been debited. It's a real account. Debited. And what is going out? Sales. The goods are going out and it's an expense. That is why it has been credited. I'm sorry, over here sales is your nominal account, and what do we do? Credit all income and profits. So over here sales is our income, that is why we credit it. Okay, next, sold goods to Sam. Two accounts involved is Sam and the sales. Sam is the personal account. What was the rule for the personal account? It was debit the receiver. He is receiver of the goods. That is why we have debited him. Sales is our income. Okay, hence it is credited. Let's see another one. Purchase furniture. Okay, so in this two accounts are furniture and cash. Both are real account. What is coming in? Furniture is coming in. That is why we have debited it. And what is going out? Cash is going out. It has been credited. Let's see another entry. Purchase machinery. Two accounts involved are machinery and cash. Okay, what is coming in? Both are real account. What is coming in? Machinery is coming in. And what is going out? Cash is going out. Hence, we credit the cash and debit the machinery. Okay, next. Paid wages. Two accounts involved were wages and cash. Wages is what? Nominal account, because it's an expense. So, whatever expenses according to nominal account, debit all expenses and losses. Hence, wages have been debited. Okay, and for the real account, what was the rule? Debit what comes in, credit what goes out. So cash is going out because we are paying the wages. Hence, it has been credited. Lastly, it is said that Mr. John withdrew $100 from business to pay his personal expenses. Okay, so the two accounts involved is drawings and cash. Drawings is a personal account. So, what is the rule for the personal account? It is debit the receiver. John is receiving something because he is withdrawing something from the business. Hence, it has been debited. And what is going out? Cash. It's a real account. It's going out. Hence, it has been credited. That is it for today. I hope you've liked the video. Kindly subscribe to my channel and like it, and further share it with your friends. Thank you.